Let's use a $1,000 account, for instance. You have you are given $1,000 account to trade. Now, there are two things that is required of you. Okay? Number one, you have to understand account management. How do you manage this account? Account management. How do you manage this account for profitability? How do you add value to the account? Number two, without compromising it at all. Number two, for you to achieve a better account management, you need to be proficient in trade management. Trade management, sorry. Okay? Trade management. Then I said before.
Sorry, is it not better to record?
I'm recording now.
Oh, sorry, I didn't know.
Yeah.
Sorry, please.
So I said before that you can be good at technical analysis, but if you don't have this understanding of trade management and account management, you will not be able to make money. That is why many people struggle. They struggle to the point where they want to give up. Please don't give up. The only thing that you are lacking is not something that is taught in the industry, unfortunately. You can see 1,000 technical analysis video on YouTube before you see account management video, or before you see one trade management video, if you see any. Before you see one risk management video. It is not taught. And so traders oftentimes believe that once they know technical analysis, that they will succeed. No. Technical analysis is not difficult. Like some of you following me for some times now, you are becoming upgraded when it comes to analyzing the market. And little by little you will get there. But what of the account management part? What of the trade management part? Now, let's start with account management. Let's start with account management. When we say account management, the number one thing that should come to your mind is your risk per trade. Risk per trade. If you want to write, you can write. Number two thing that should come to your mind is, I've taught you this before. Daily loss limit. Daily loss limit. We're talking of account management now. I will explain each and every one of them. Risk per trade, daily loss limit. Have you written that? Daily loss limit. Then number three, session. Session to trade. Session to trade. So when you want to manage your accounts, right, you have to think of these three. Risk per trade. When you say risk per trade, some people, they have a fixed risk. Some people's risk is dependent on the quality of setup. But who defines quality of setup? Have we not seen the best setup hitting stop loss? Is it new? I've had more than 100 before. So risk per trade. If you have $1,000 account, okay, If you want to do it in terms of percentage, fantastic. You want to do it in terms of the amount you want to risk, fantastic. But anyone you apply is good. Let's assume you want a 1% risk per trade. It then means that you cannot risk more than $10. You can't risk more than $10 per trade. Per trade. Listen, I did not say per position. Did I say per position? No, I said per trade. Because when we say per position now, some people will now go and enter 4 positions. After they have entered 4 positions, they will now say per position they are risking 1%. On the same setup, they enter 3 positions. And if you should lose that trade, of course you know that your risk is now times 3. So you are no longer risking 1% in that setup. You are risking 3%. That is why we discourage using the language risk per position, risk per trade, because you can have 1 trade like this and have 3 positions there. Do you get what I'm saying now?
Yes, sir.
And nothing will make you to break this rule. If you have set that rule, nothing will make you to break it. You should stand by it. Slap yourself. The only problem is that in this market, even if you slap yourself 100 times, there are some things that you still go and repeat the next day. You still go and repeat it the next day. The only thing that is a savior in this market is if you begin to enjoy Forex money. Excuse me, hear me well. What's the best thing that corrects your psychology, that puts your psychology in proper perspective when you are enjoying Forex money? I am telling you the truth. If you have not started enjoying, go and do your research. Those that don't enjoy Forex money are those that misbehave in trading. They misbehave anyhow. They trade anyhow. Go and check. They have not started enjoying Forex money. Do you know what it means? You know what it means to go to the supermarket and you are shopping with dollar card? You know what it means? You know what it means you go to eatery. You want to eat food and you are buying food with dollar card. CBN or bank, your bank exchanging at official rate, you don't care. Once you have gotten to that level, you don't want to come down. Once you have gotten to that level, you want to ensure that you remain there. You want to ensure that you continue to enjoy that money. So when you now see a trade, that objective, that feeling that you must enjoy this money will not make you to be reckless, because you know that if you are reckless, you are not going to enjoy yourself next week. Hello. So when we say risk per trade, keep it normal. Keep it normal. And let us see whether in few months to come, you not start enjoying Forex money. Risk per trade, stand by it. Then that should lead me to daily loss limit. Daily loss limit. There are some people, if they lose now, they will look for another entry, they enter. They lose, they look for another one, they enter. In one setup, they can have about 6 or 7 trades. Hey, 6 to 7 trades on one setup. What is going on here, guys? They don't have a defined daily loss limit. If I have $1,000, why should I continue trading for the day if I have lost 3 trades, for instance? Am I insane? I have lost 3 trades. Why should I continue? No need. Absolutely. So you must be able to define for yourself that if you lose 3 trades in a row, stop for the day. So based on the size of your account, you must have daily loss limits. All right? That is a crucial part of account management. You will discover that if you don't have this daily loss limit in place and be disciplined to respect it, some days you'll be losing $100. If it has happened to you, type 1 on the chat box. Let me see. Where you lose 10 to 20% of your account in one day. I want to see. Just type 1 on the chat box. It has not happened to anybody before. Oh, I can see. Yes. Myself that is talking to you. It happened to me severally. But mine is understandable. Do you know why I say mine is understandable? Because from onset, what I do is I don't deposit big money in my Forex account. No. What I do, I can put $500 there. I will turn it to 2,000, 3,000 and withdraw it. Use it for whatever I want to use it. Come again when I want to trade. Put another maybe 500 or 1,000. I just go to my company, withdraw there, put it, change it to dollar, put it there. Turn it to 3,000, 4,000, withdraw it. So I'm a master when it comes to putting small money, grow it bigger and withdraw. Not putting bigger money, continue to struggle with it. No. But it's now that because of schooling, because of other activities, I have now learned to at least put reasonable money so that anytime I'm free, I can now trade. When I'm not free, I will leave it. Do you understand? You can't do that for small accounts. If you must make money for small account, your risk cannot be small. That is why I have a lot of pity for those that trade small accounts. I know what it means to trade small accounts because that is my specialties. Yes. If I'm trading $100 account and I want to withdraw $800, $1,000 there in 2 weeks, you think per trade my risk will be $10? No. But that is not to say that you should do the same thing. Because there are 2 things that define this risk per trade that you should be doing. I jumped that one before I went to daily loss limit. Just my training may not be organized, but just use style to follow me. Okay? There are 2 things that will define risk per trade that you will take. The risk per trade for Vitus will be different from risk per trade for Nat, and may be different from risk per trade for Kubrat. Yes, it cannot be the same. Why will it not be the same? There are 2 things that defines it. Can anybody remind me?
The win rate and the RRR.
The win rate and the RRR. My win rate can be 40%. And my RRR can be, average RRR can be 1 to 5. With this, I'll be a successful Forex trader. And with this, I can afford to risk 10% of my account. I will survive it. But if another person have an average risk to reward of 1 to 1, my own is 1 to 5. Somebody is 1 to 1, but is having a win rate of 60%, 50%. the person will be struggling on one level, will be rotating in a circle, be rotating in a circle, be rotating in a circle. And for that person, he dare not use 10% risk per trade. If he has a losing streak of 4 or 5 trades, the account will go down massively. You'll be losing big. So as a trader, you should be able to define your own win rate. If you don't know how to do this, go and open a free FTMO trial where you can have access to your what do they call it now?
Trading statistics.
Yes, that's what they call it. Metrics. You can have access to your metrics where you get your win rate, your risk to reward, your Sharpe ratio, your this, your that. You will see it. It's not, you don't pay for it. It's free. Go there and do it, so that you use that to assess yourself. Sometimes, because I don't connect my account with my FX book, I just go to FTMO, get a free account, trade it. I want to assess my win rate. I want to assess my risk to reward, average risk to reward ratio. I want to assess my my average reward. I want to assess my average losses. I want to assess all these. This keeps me in check as a trader. This makes me to know whether I am doing it rightly or not, whether I'm making progress or not. So you should be able to define your own, your average risk to reward, define it. Your win rate, define it. Once you are able to ascertain these 2 parameters, you will know whether you should be using 1% risk per trade, or 2% risk per trade, or 5% risk per trade, or 10% risk per trade, or 20% risk per, or 50%. Can anybody use 50% risk per trade? I don't think so.
The person has 50% win rate.
Yes, except the person is 100%, the win rate is 100%, and the risk to reward is 1 to 10. You can do that, but I don't think there's anybody anywhere in the world that can do that. I don't think so. There may, sir, but I don't think so. But I'm not close, very far away from that level. Do you understand now? So once you know this, you can define your risk per trade. Because I'm saying this because some of you are shooting yourself in the foot. Why? You are supposed to be using 3% risk per trade, but you are using 1%. Sometimes you use 0.5%. You are throwing away the remaining 2 to 2.5% of your profit. You are throwing it away because you are underutilizing your skill, thereby making lower profit, making less profit. Do you understand now? So that is the importance of understanding that one. And then again, before I go to session to trade, again, it is not every trade that you will leave to hit TP. Hello?
Yeah, this is very
I'm
important.
telling you now that it is not every trade that you're going to leave to go and hit TP. If you are doing this, you will find out that the money that you have made, that you have left on the table, is probably up to $10,000 since you started trading.
This is my major problem.
Yes, it is not every time that you allow your trade to hit TP. Okay, apart from my students in the private mentorship, I don't think I have taught anybody this. Okay, you don't just decide that this trade is I'm going to leave it to hit TP or not. You don't take that decision yourself. It is not for you to take. It is a decision that is reserved for the existing market condition. Okay, there are market conditions that permit your trade to hit TP, and there are other market conditions that will say, hey, this trade will not hit TP, or it will hit, but it will take time. And if it will take time, the up and down movement is going to batter your psychology. So you better exit. How many of you know that we sacrifice profit in order to improve or gain psychology? How many of you know? We sacrifice profit. We leave profit out. We close it so that we can rest, so that we can sleep well. You think we don't need money? We find a way to do trading and make it so simple that our psychology remains intact. I want to trade without developing gray hair. I want to trade without headache. Yes. Do you understand what I'm saying now?
Yes, sir.
I was saying something, I've lost touch. I have too many things to say. What did I just say now, please?
You were talking about closing trades that we shouldn't wait.
Thank you. Now, that is the essence why you learn relationship between volatility and liquidity. You know a market that is liquid. You know a market that is volatile. See, a market that is liquid, that have structure, okay, can turn out along the line as it proceeding from here to here, as it's proceeding from this level to this level, can decide to become volatile. Hello? Is somebody hearing me?
Yes, sir.
Yes, sir.
A market that is liquid, structured, well-structured market that you enter at this level can decide along the line to become volatile. This kind of market, you don't allow it to go to TP. If you hit this top, congratulate yourself and take your profit. Because you are now transiting from liquidity to illiquidity. Liquidity to illiquidity. And when you are transiting from liquidity to illiquidity, what result, the consequence of this action is volatility. And when there is volatility, your profit soar. You have a big money, and all at a sudden, your profit go down. Whoom. Your profit disappears. So when you have such market condition, you don't wait for your trade to hit TP. No, you've got to close this guy. Close it. And, reserve your energy. Then, if a market that is liquid is now proceeding nicely, you allow it to hit TP. Is that okay now? Like, this is a liquid market. That's why I'm holding. I'm even adding position. You can see it's not going down unnecessarily. It's not flashing up, flashing down. It's going gently. If you look at GU, can you see? It has hit the TP. It has hit the TP. Why? Because it is liquid. And when it was proceeding from here, on my lower time frame, it was showing evidence of liquidity. So when a market has a preserved liquidity in it, why must I not allow it to hit my TP? This is a crucial part of account management. So you now discover that at the end of the day, most of you will always leave your trade, the one that you are winning so well, that you're supposed to understand market condition that will necessitate you to leave the trade to hit TP. You close it halfway. And the trade that is liquid, but along the line, it transits to illiquidity, and as a result of that, volatility happens. that you're supposed to close your little profit and go and rest. You leave it, it will get there, it will get there, it will get there, all at a sudden, all at a sudden, all at a sudden. Do you know that as it is volatile, it's leaving inducement behind, it clear everything and goes again. Why do you think it has become volatile? Because it has no liquidity again. And as a result, it's now creating inducement, creating inducement, creating inducement. So before liquidity can now arrive in the market, it must clear all the inducement, develop another level, and then move to the upside. You now cry. When you cry, some people now enter here. So you must be able to understand the relationship between liquidity and volatility. We apply it. We apply it not only to know a tradable asset, we apply it in knowing a market to live to hit TP and a market to close along the line. Is that okay now? So if you see that your account is not growing, if you go and check your history, you will discover that you are not having a big win. You are not having what? A big win. You don't have a big win, guys. You don't. You are having losses. And some people, let me tell you, some people, they say, I'm only risking 0.5% of my trade. I swear to God, if you lose 200 trade, you have lost your account. Maybe you are risking only 0.5%. Fantastic. Fantastic trader, guys. Fantastic trader. But lose 0.5, 0.5, 0.5, 0.5, 0.5 in 200 times, your account becomes zero. So what am I telling you now? What am I saying in essence? What I'm saying in essence is that you need to, I'm not saying it's a crime to lose. I lose. But when I lose, it is maybe I put my entry and everything at the right place, but market just need a little more liquidity. Just take me and it wants to go. I know that, oh, just taking liquidity and go, I will re-enter. Simple. So that loss that you see is inconsequential to my account. I'll get it back in multiple fold. So what I'm saying is that it's not a crime to lose. But when you lose, how do you lose? Make sure you restrict your loss to small loss. And then, it may not be regularly, but occasionally you must get a big win. Go and write it down. You must get a big win. I want in this history, I want to see a loss of $10, $10, profit $70, $10, $90, $10, $35, $10, $150, $10. Can you see? 4 in a row. You have lost 4 in a row. That is $40. But the next one you win like this, $80. Can you see? So your one win is consuming 8 losses. 8 losses. And you remember, we have put a caveat. What is the caveat? You must be able to define your acceptable daily, permeable, is it permeable we call it now? Or allowable daily risk limit. That defines the overall or the totality of your exposure, your account exposure to the market. You must be able to define it. Once you are able to define it, and you are saying that you can't lose more than 3 times in a day, you leave it. When you ensure that you have a big win, that's a big risk to reward ratio. If you have a big win 1 to 15, before you will lose this 1 to 15, you are going to lose 15 trades. And if you are analyzing the market the right way, it will be impossible for you to lose 15 trades in a row. This is my methodology, guys. Very simple. This is how I manage my account in such a way that I don't mess it up. Is that okay now?
Yes, sir.
Let's proceed. Let's proceed. So we are done with what? Have I deleted it, or it's under BTC? Okay. So that is daily loss limit. Then session to trade. Session to trade. Session to trade. What to trade? Write it. What to trade. We are still talking of account management. Now, the next thing is session to trade. Let me tell you something. When you are analyzing the market and you get your structure is completed against a high volume session. I can't stress this enough. When you see a structure that is completed by this time, run away. Felix, are you here?
I can hear you, sir.
When
Yes,
you
sir.
see a structure that is complete or that is completed by 6 p.m. Nigeria time, what do I say you should do?
Run away.
Run away. Now, why must you run away? The reason why you must run away is that the essence of mitigation is to bring the price to an acceptable level where investors can come in, where they can buy and sell. Then, if you are telling me that you are bringing the price to an acceptable level for me, when I know that the people who can buy and sell there are no longer in the market, of what point, of what use is the good you say you are doing to me? You cannot be pushing snake to me and be telling me to enjoy myself. For what? It won't work now. Except with a condition that such time you have a news release like FOMC that's been released by 7:30 or 7 p.m. Nigeria time. You know that with this now, volume has come into the market. If there is mitigation, you can trade. But apart from that, you have to wait, because if you get involved, the market will stay on that lane, but the next day, the market is going to take every level out and begin a fresh move. This is what used to happen. Ask one of my friends who is in this call. This is what used to happen to us those days. We would trade, we would enter position around 5 o'clock. The next day morning, we just discover that it has hit stop loss. What happened? Why? Because we got our mitigation at the wrong time. Because the time that mitigation happened, nobody to deal. Every person that is to deal, every investor that is to deal, they have gone. So you must be wary of session to trade. So this explanation is now leading me to the best session to trade. I keep telling all of you. The best session to trade is London, New York overlap. I'm repeating again. You want to succeed in trading the financial market, the best session to trade is London, New York overlap. Why is it London, New York overlap? That is where we have the biggest volume in the market. All the banks, you see all these transactions you are seeing, all these transactions, some banks are completing those transactions. And I want to tell you, I was discussing with my friend Vitus, I think yesterday or the day before yesterday. This market we are trading is what is called future market. There is what is called spot market. So the real people who are trading the market, whose trading, whose action and inaction is affecting liquidity and otherwise in this market, are those in the spot market. They are the one injecting money. What are you trading in the future market? Is average. How much do you have? You are injecting $1,000 and they are giving you access to 100,000 US dollars. Do you understand what I'm saying? You are not trading the real asset. You are not trading the real asset. You are trading the value. You are betting on the value of the asset. And excuse me, where is the value of the asset determined? The value of the asset is determined in the spot market. That is where they are putting the real money. The real money. That's where they put it, in the spot market. That is the supply and demand dynamics there. is what determines the value of Euro USD. But you are now betting on that value in the future market and you are putting your money. That is why you can afford to use leverage here. You get what I'm saying now? So what I'm now saying in essence is that these guys in the spot market, they are awake to do business during London, New York overlap. That is number one. Number two, most of the transactions in the spot market is US dollar based. Most of them. And then majority of these banks that control this are headquartered in the United States of America. So if they are not open for business, most of these transactions may not get concluded. So when they open for business and they are concluding these transactions, that is when you see that liquidity coming to the market. So that's why we keep insisting that when you see structure complete against London, New York overlap, that is your best trade. That is your best trade. It's just like something is being sold for $100. But because we know that Dangote is coming by 7 p.m. today and is going to buy in big volume, we now gave discount around that time that Dangote is coming. We now sell at $70 because we know that our sales in the next 10 days, only Dangote will buy it today. That's what it means. So market must be brought lower against London, New York overlap because big volume is coming to pick it up. And then if you are to sell, market will be brought to a higher level against London, New York overlap because that is where those that hold the instrument are ready to sell it. And if they come and they see that the price is low, they on their own will push it up. You don't want to move, you don't want to go up. They will buy it to the upside, close their buy, and inject volume for the sell and sell it up again. That is the game. So that is my secret. I'm telling you my secret. I study structure and allow it to complete against London, New York overlap. That's how I manage my account. If I have this, I want this to happen against London, New York overlap. It is when I get here. If I am still here, I'm still at the top here, and this is London, New York overlap, I will wait. This will happen. If it doesn't happen, nobody will buy here. Those that have the money, they cannot afford to buy at the premium. That is the logic. And excuse me, sir, you cannot discover this on a higher time frame. That is why we maintain 15 minutes, 30 minutes, 1 hour for our analysis time frame. That is where you can see the structure clearly. That is the truth. That's where you can see the structure clearly. Why did I start using 1 minute, 2 minutes, 3 minutes to see my efficiency? The lower the time frame you go, the better you can see market structure. I want to repeat myself again. The lower the time frame you go, the better you can see market structure. Coupled with the advantage that you have a better risk to reward when you now enter in such a lower time frame. Are you guys getting me now?
Yes, sir.
That is
Yes,
session to trade. You have to discipline yourself to stand by London, New York overlap. When I trade London now, somebody will now tell me, guy, you told us to trade London, New York overlap. Why are you trading London? You will get there. When even in the midnight, you can trade. You can trade anytime. You will get there. But for now, restrict yourself to the highest volume session. I beg you in the name of God. Is that okay now? So that is part of account management strategy. Because you will discover that if you do this, you will be exposed to high probability setup. each time you want to trade, because most of the mitigations are happening exactly this time. I conducted a small research and I discovered that any of my students that come from Canada, they trade better. US and Canada. Any of my students from US and Canada, they trade better. They make more money. Do you know why? It's not because they don't need money there. They are calm while they are trading. No. The time they wake up to trade, okay, favors them. That is when you have the highest liquidity in the market. That is when they wake up to trade. So when you are already struggling here, you have made 3 losses. You are in Ghana, you are in Sierra Leone, you are in South Africa, you are in Nigeria. You have made 3 losses in London session. They are still sleeping. Those guys are still sleeping. When they wake up, you have London, New York overlap already playing out, which is the highest volume in the market. So they wake up against the highest volume. You remember Joy? She makes a lot of money. These are people that time may favor them when it comes to liquidity. They are waking up when the chairman of the board of directors is arriving in the meeting. They come in to the meeting when the chairman arrives. So they don't have to wait for long, waiting for the chairman. No. Are you getting what I'm saying now? So if that is the case, if this is what I found out about my students in US and Canada, you that is in Africa, can you just make that sacrifice of waiting for New York to start before you start trading? Can you just wait? Take that sacrifice. Apart from the advantage of you being exposed to the high probability setup, you also have one advantage. I will tell you today. If you have problem of over trading, that will correct it for you. If you have problem of over trading, that will correct it for you.
You are talking to me, sir.
Yes, it will correct it. It will correct it for you. Because you will have made up your mind that no matter how beautiful a setup is in Asia, you're not going to touch it. No matter how beautiful a setup is in London, you're not going to touch it. That if you can get a beautiful setup in Asia, you can get a beautiful setup in London, you can get a super beautiful setup in overlap. So why not wait for overlap? Excuse me, if good setup can come in London and Asia, they can also come in overlap. Better one will come in overlap. Why don't you wait for that time? Are you getting me now? So this is a way to remove overtrading completely. Overtrading will be removed from your life completely. That is part of account management strategy. Session to trade. Then what to trade? What to trade? Write this one. Target amount is a killer. Write it. Target amount is a killer. I will explain that to you. Now, what to trade? This instrument that you are to trade has a big influence on your trading. I have shouted, I have screamed, there is nothing I have not said to you guys, telling you to restrict yourself to the major currency pairs. Some of you deviate. You go and trade the GBP NZD. You go and trade the CAC CHF. I'm telling you, if you don't understand Yoruba, please, Yoruba people, can you interpret for me? You follow them, come. Abi?
Escort.
You escort them, come.
So,
See, let me tell you the disadvantage. If you are trading a non-major pair, let me tell you the disadvantage. See, these non-major pairs, the volume available for them in the market is low. So it costs your broker more to look to seek liquidity to conclude your transaction. And because it costs them more, they will bring the cost on you. So if my broker is charging me commission of $3 per lot for GBP USD, they will charge you $6 per lot on GBP JPY. So you may be looking at it that it is just a small commission per trade. But excuse me, by the time you calculate it in a year, the total is more than your profit for that year. Because some month you have a losing month, but your broker make profit from you. Is that okay now? So what do I have to do with the major pairs? Because these major pairs are liquid, the commission charge on them is extremely small. So I'm careful with the way I donate commission to my broker. I'm careful. Because when you calculate at the end of the year, for my own way of trading and my account size, I will have donated in commission not less than $50,000 if not $100,000 to my broker. If I am trading a non-major pair. Again, when you are managing your stop loss, by the time spread is making you to hit stop loss in non-major pairs, in the major pairs, you are still there. I've had a trade where it remained 1 pipette to hit my stop loss on euro dollar. It did not hit it on IC market. So when I'm preaching to you to come and open your account with IC market, I know what I'm gaining from them. And then most of you think I'm doing business. Oh, I want you to use my what do you call it? Referral link, so that I will make money from you. I pity you. It's more for your own good than for my own good. Because with IC market, 1 pipette to go on major pair, it will not hit it. Because the spread is extremely low, sometimes zero. It will not hit it. That is the advantage we get from them. Try it in some other broker, which I will not mention, which some of my friends here, they know. They know how they dealt with me. I will not mention, so that it will not look as if I'm demarketing them. But I can mention my broker, IC Market. Since 2017, we have been together. And we enjoy our relationship. Okay? So, what are we saying? What to trade? Trade a liquid pair. A liquid pair, before you know it, Piam. Look at this GU. When did we enter GU? See the way it has hit TP. Most major pairs cannot do like this. It is only news that can propel them to do like this. But did we have any news on GBP USD today? But look at how it commenced and hit TP. You can't get that in other pairs. That is that. This will define how successful you will be in this business. I will not lie to you. This is the truth. Then, I told you to write something down.
Yes.
Yes.
Amount is a killer.
What do I call it? Amount. Target amount.
Target amount is a killer. Target amount, yes.
It's a killer. It's a what? It's a killer.
Yeah.
So, this is a killer. When you have $1,000 account and you are telling yourself that this week just want to make $300. What do I say? This week I just want to make $300 from this $1,000. So I swear to God who created me, you will not make $1 that week. $1 you will not make it. See, if you are defining a target for yourself, that is the biggest enemy of a trading account. That is the biggest enemy of a trading account. Defining amount, a target amount you want to make in a week. You will end up the week without making it. And if care is not taken, you're going to have a big loss in your account. Why is it so? It's simple. The reason why it is so is that the adrenaline, Vitus, what's the right language? Is it not adrenaline? What do we call it?
Yes, it is, sir.
Adrenaline, yes.
Adrenaline.
There is that adrenaline in your body that is going to be pumping. It's going to be pumping very fast. And you know what aids that adrenaline from pumping fast? What you want to use the $300 to do? Maybe when you see that thing, maybe you want to buy something. When you see that thing, hey, I want to make that $300 this week. That adrenaline will pump. When it pumps, you'll be trading like a madman. You will be trading like a madman. You will ignore processes. You will ignore risk management. When you are supposed to take 2 positions, you will take 5 positions. And let me tell you, sir, by the time you are increasing positions, you are no longer calculating risk. Your brain is bloated against calculating your risk when you are having multiple positions.
Yes, sir.
Are we together?
Yes,
Yes,
sir.
sir.
With you.
So never in your trading life say that I want to make certain amount. Are you whining me? Is your father the owner of the market that you are deciding how much you want to make? If it's that easy, I want to be the president of Nigeria. If it's that easy. Do you know the prevailing market condition that will come your way? Who had thought on Monday that this week will be full of illiquidity? Who will have thought so? Go and ask, what's his name? Let me check. Go and ask Johnson. Go and ask Johnson what his eyes saw in this market this week. Go and ask Johnson. At the time he said he was not trading this week again. If you're having target for yourself, you will be pushing to meet up that target, and you will be picking trade without following processes. You will be picking trade without following risk management. You will be picking trade outside your system. A market that have gone, you want to still enter, and at the time you are entering buy, the market is retracing, and your losses will be compounding. It's a killer. It's a killer. And do not allow this to kill your success. If that is not what you should say, if that is not what you think, then what should you think when you want to start a trading week? It is better for you to say, this week, I want to ensure that every trade I take, I journal it and I follow my processes to the letter. Anyone that comes and there is a deviation from the standard, I'm not going to take it. This week is process, and nothing more. This week, I want to ensure that every trade and setup I take, I can define it, I can discuss it, I can explain it, I can teach it. I can teach it. If you have a setup before you and you cannot teach your neighbor, you cannot teach your friend, how does this setup come about? Then it's not worthy to be taken. You see, the trade that I took, what did I do to you when we came? I sit you down and I walk you through the thought process behind those setup. Is that not? Including BTC.
Yes,
I walk you through. I was able to explain to you. Are you able to explain yours? And if you are not able to explain yours, based on how we have defined it, based on the standard we have set, something is wrong with that setup. Something is definitely wrong with that setup. Then it's not worthy to be taken. And at this stage, if a setup is not correct, if a setup is not according to defined standard, you should know. You should know. Don't quote me wrong. Mistake might come, mistake might arise, but we will accept that it is mistake. That, oh, you follow it. Just like me, I had 2 setups this week that didn't go as I projected. Why? Because at the time I made that projection, that was done based on available data, and a little while more data came and then changed the course of the trade. There's nothing I can do about that. I have to leave it.
It's beyond your control, sir.
You said what?
It's beyond your control.
Yes, that can happen. So it is process, not a month. So that one now does not make me to, to be anxious. No. But should I now break the good news to you? If you now follow this process, as you say you want to follow it, to maintain the standard, money will follow. Money will now what? Follow. So those that you see that they are making money in the Forex market, they follow the process. Their initial objective is not the money making. Their initial objective is how do they follow the process as it is defined. Because they know that is the secret of the rich, and that's the secret of the profitable traders. They know that following the process alone will make money to follow you. If I give you a list of my 100 to 200 setup trade, successful trader ETP, all of them have the same entry methodology. All of them. Similar, different pairs, similar. Is your own like that? Is your own like that? If your own is not like that, you are not consistent in analysis. And when you go to our course, you see 5 pillars of consistency. Consistency in analysis is one of them. If you are not consistent in analysis, you can never make money in Forex market. The way you analyze market yesterday should be the same way you analyze it today, should be the same way you analyze it tomorrow. You must not deviate. Since you knew me for the past 1 to 2 years that most of you have been with me, have I deviated in the way I analyze the market? The same way. That enables us to deepen the process, remove something that is not too good, add something that is fantastic, make it simpler. So target amount is a killer. So we are done with hey, this thing is getting longer than expected. I will rush the other one so that we go, because I know some of you will want to go and cook for your husband. All right? Or some of you are in the office. You are in the office now, you want to close. So or some of you are on the road. So let me just rush the second one so that we can be going. Are you okay now? So,
Yes, sir.
trade
Yes, sir.
management. Trade management. See, if you do everything that we have said above, if you do it and you don't manage the trade, this one you see here, this trade management you see here is the actual thing that deliver money to your account. All other ones you see here, daily loss limit, risk per trade, all those things, those are the things that prepares you for the money. But the actual delivery of the money to your account is this trade management. When you you manage your trade that money will come. You can have risk per trade now. Risk per trade, maybe $10. Then you have a trade that is already giving you $40, and you can still lose the trade. Is that correct?
Yes, sir.
You can still lose the trade. So, is it good? You have already gotten 1 to 4 risk to reward, and you are still losing the trade. Up till now, some people are still trading without understanding how to break even. They don't know how to break even. They don't know. At this point, it's not correct. You should know how to break even your trade. So, number one way you manage your trade is break even. So everybody knows what is called break even, but at what point do you break even? That is what I want to discuss with you before we proceed. There is no specific rule of break even. There is no specific rule that say this is when you should break even. Yes. And let me tell you, there is a certain level of risk that I will apply in my trade that I won't break even. Hear me well, oh, hear me well. There is a certain level of risk. If I'm trading $100,000 account and I'm risking $100 per trade, hear me well, I won't break even that trade. Why? Why will I break even? Because this risk is insignificant. It's insignificant to my account. But if the risk you are applying, though minimal, but if you lose it, it's painful, you have to break even your trade. But at what point should you do it? There are different ways to do it. Let's start example. If you have something like this, and you are having entry here, correct?
Yes, sir.
You are having your entry here. Now, if you enter a trade here and you put your stop loss, why this thing? Sorry. Sorry. You enter a trade here. All right. You want your target to be this level. Let's say minus 0.62. That's where I want my target to be. Now, you see that this setup, usually when this market mitigates at this level, it does not stay here. Is everybody aware of this?
Yes, sir.
It moves out immediately. That's number one. Number two, you know that if this mitigation happen here and you have to study for efficiency, you get this and you enter. Right? Do you see this structure here on the entry time frame here? Once I break this structure here to the upside, I did not say this one. No, I said this one. Once I have a push to break it like this, excuse me, I'll move my entry to break even. How? I'll delete the stop loss and put the entry price on the stop loss. Why do I have to do that? The reason why I have to do that is simple. If it has not broken it like this, it can still come back and take this one before it goes. Who is agreeing with me on this?
Right, sir.
Correct. So, but immediately it comes and break the top of that entry time frame. Once it break this top here, I just move my entry to break even and forget about the trade. I'll drop my phone. Forget about the trade. That is one way. Another way is that if you see that the risk you have applied for that trade is much, maybe you are supposed to use 1% mistakenly or by greed, which is not supposed to be, you are doing 2%. As soon as it just move, as soon as it just push away from your entry, maybe 5 pips, break even. No, break even. No, I'm telling you, please break even. If it comes back to your entry and takes you out, find a way to enter again. It is better like that. It is better like that. Do you understand me now?
Yes, sir.
Yes, sir.
There are some people, if they enter here, they are not going to break even until they break this top. Yes. If you target, especially if you target minus 0.62 until you break this top. I don't like this style. This is the style I like. Why is it that I don't like this style and I rather prefer this one? What of a situation where this market get to this, it doesn't break this top here and it comes back to the low? What happens to you? That's the scenario I was painting for you. That after you have seen 1 to 5, the market now still take you out. That is an aberration and it's not supposed to happen. Are we together? Are we together?
How it is, sir?
Good. That is trade management. Trade management is confirmation, or confirmation is trade management. Confirmation. When you are entering your trade, okay, I told you sometimes you enter here if you want to be aggressive, sometimes you wait for confirmation. Now, when you wait for confirmation, the advantages it gives you, there are many. One of it is that you have a good risk to reward ratio. Another one is that you are able to confirm early enough whether the trade has liquidity to proceed or not. You can have liquidity here and the liquidity will transform to illiquidity and you now begin to have volatility here. But when you wait, you will agree with me that for you to even wait to have efficiency here, it means that market is liquid. That's why it's giving you structure. I know why I thought in that direction. And I gave you the book where I got some of the ideas. I gave you. When I thought to relationship between liquidity and efficiency, I gave you the write-up. Did I not give you?
Good, sir.
Yes, sir.
I gave you. All these things you see that I put together, okay, they are research from those books. I'll give you some journals. When I get to Lagos, I can bring them out. If you want to read, if you are a reading type, I will give you. Go and read. You go and read technical analysis of capital market. Go and read them. Go and see how it is done. That's when you now know that the way we have been trading market in the past, we're deceiving ourselves. Rubbish. We're doing rubbish. Those that outlined the way we're doing it before, they were not those that went to school to study. So whatever they gave to us, we barbarically accepted it. And it later haunted all of us. But you want to know the real way, the real methodology to approach the market, approach it from academic point of view. And that is why I give you academic content. If you are a reading type, go and read them. When you read them, you will see how these things work. And you will not stress yourself so much. There is still a lot to talk about under trade management. But I guess we have to stop here because I'm really getting tired. I've talked for 2 hours non-stop. I'm really getting tired. We have 10 minutes to go. I'll ask questions. If you have any questions in 10 minutes, next time we meet, we'll keep talking about this. We cannot finish it in one session. Account management, trade management principle, risk management principle, we can't finish it. In fact, there is even one again. Confidence building is one session I will use to discuss that one with you. How do you build confidence? After you know how to manage your account, you know how to calculate your risk, you know how to manage your trade, you know the technical analysis, you know fundamental analysis. If you cannot build up your confidence, you will be operating below capacity. Your capacity is supposed to be 70%. You're operating at 40%, 30%. Why? Lack of confidence. You will see a beautiful analysis, a grade 1 analysis. You are still doubting. You are still doubting. That is a lack of confidence. All right? A lack of confidence. I'm going to use a whole session to teach you how I build confidence. I will tell you where I derive motivation. You come to my YouTube, you come to my house and check my YouTube, you see where I'm watching degenerates, how they operate. Is there any general that is preparing to go to war and is afraid? But before they set out to go for the war, go and check their rooms, their meeting rooms and all those things. You see strategy. You see how they discuss strategy, how they will go like this, how they will go like this, how they will counter like this, which tool to use, which this to use. You see how they deliberate on all this. When they are done with that, they are full of confidence. I derive motivation from them. I derive motivation from big pastors who are doing incredible things. How do I derive motivation from them? I derive motivation from our Lord Jesus Christ. He will go and pray. He will go to the mountain. He will go and pray. The disciples will be playing. They will be sleeping. They will be snoring. And when they come, they are going together. He will be casting demons. They cannot do it. They will be casting demons. He will be casting demons. You just say, rise and walk. The lame will rise and walk. The disciples cannot do it. Why? This man has been praying since yesterday. They did not pray. They were sleeping and snoring while they were to watch. So I derive motivation from this. I study. I see my pastors, okay, the good ones that pray very well. When they come, what they will do during healing and deliverance session, I cannot do it. Why? Why these people spend hours in the prayer room praying? I spend my own hours on the chat, and carrying big books, and I'm reading. What they can do, can I do it? I cannot do it. But then I derive motivation from them. What they know how to do best, they stay with it and sleep with it. What I know how to do best, I stand with it and I make sure I remain with it. Confidence building is another topic for another day. Okay? So, any question, please? 5 minutes to go. Ask your question. Let's deliberate. Let's talk. Then we go. I believe you guys have gained a lot from this session.
Yes, sir.
Correct.
Yes. Sir, thank you for the lecture.
Yeah.
There's something I just want to add to help us understand. Okay. So I just want to suggest there is this risk of ruin calculator you can use to calculate the amount you can risk per trade. So far you know your win rate and your average risk to reward ratio.
Yes. So
yes, there's a risk of ruin calculator. If you type it on Google, you will see it. Okay. You can just use the reference second skies. So you can use that site. So the risk of ruin calculator, you just input your win rate, you input your risk, average risk to reward. Okay. Then you input your risks per trade. So if you get, you calculate. Then if you get something greater than 0, then there's a probability that you are going to blow your account. You understand? Okay. Or if you input your risk, let's say you now reduce the risk maybe from 5% to let's say 3%, and the value after calculating the value becomes lesser than the one you got before, let's say 0.5 as opposed to maybe 0.9. Yeah. So there's a reduced risk of blowing your account. So you keep on reducing that risk until that ruin, that risk of ruin becomes zero. So once it becomes zero, that particular risk you use to calculate it becomes your optimal risk to use. So I don't know. I can speak with Mr. Nat and tell him about it. Maybe he can teach us next section.
Okay.
You guys are.
No, you can teach us now. We can organize a session. You just because this, yes, let's be frank with ourselves. If you are in terms of risk, if you are there, number one, you can't blow your account again. You can't blow your account again. In as much as you are getting some wins here and there, not that you are not getting any win at all. Loss. If you like, reach 0.01. One day, the account will end. It's just a question. It's just a question of time. It will end. It's just a question of time. So, but make sure that you are getting some wins. And when you get some wins, those wins are good. Do you understand what I'm saying now? So, it's very, very important. We can discuss, and within the week, we can take that. All right? 30-45 minutes should be done. You can teach us that, and let guys have that idea. Okay, thank you very much, Vitus. Another person, another question?
I've not seen the last video.
Go to YouTube. It's there. Somebody drop it on the group.
No, the first one you sent the link to us, but this other one, the last one.
Somebody sent it to the group.
The last one.
Somebody asked about it, and another person drop it on the group. It's there on YouTube now.
I'll check.
Please check. Another question? All right. So, in the absence of no question, thank you all for coming. We'll see you in the group next week. Bye-bye.